It was not obvious at the outset of this pandemic that housing prices would continue their march ever upwards, but they sure did. With us to understand why, let's welcome economist Mike Moffatt. He's senior director at the Smart Prosperity think tank and an assistant professor at Western University's Ivey Business School, and he joins us now from the nation's capital. Mike, it's good to see you again. How are you managing through all this?
I think I'm getting by like everyone else. I've got a daughter homeschooling here with me, but otherwise life is good.
She just made a cameo in the background, I think, which is consistent with pets, spouses, kids. Anyway, lots of cameos being made these days. I want to start out with just a little background, if we can, please, and go back to the 1980s when people who were around at the time may well remember that housing prices also were going through the roof for a good long chunk of time. But then at some point, there was a pretty significant correction, reminding us that what goes up can come down. Can you just sort of revisit that time and tell us how all of that happened?
Yeah, during the 1980s, kind of like today, we had a big population boom. We had a lot of people moving to Ontario, either from other provinces or across the world. And we had a housing boom that went along with it. And one of the things that we saw is when the Ontario economy had our big correction in the early 1990s, a lot of those people moved away. But we had a lot of homes that were built. So there were too many homes chasing too few people. And we saw huge declines, particularly in the GTA overnight, 20, 30% price declines. So I think a lot of people are wondering who remember that time, is this the 1980s all over again?
Well, assuming there is some institutional memory where you are and where I am in Ottawa and Toronto, the two big capitals of the country, do you think there's anybody in government today that remembers that? And is there any particular kind of policy they might want to introduce to ensure we don't get a repeat of that?
Well, I certainly think people remember it. It's tough to know what to do. I mean, what essentially you need to have happen is essentially the number of people wanting to buy a home has to be roughly equal to the number of people wanting to sell a home. And that's very, very hard to control. I mean, right now we're seeing prices going up because for every home that's getting sold, there's two or three or multiple offers for it. So the government needs to find a way to sort of reduce the number of bidders, but not reduce it so low that now there's two homes for every potential purchaser, and that's a really hard thing to pull off. So it's one thing to be able to identify an outcome that you want. It's another thing to figure out what the policy is to get you there.
So in effect, we just got to let the market do its thing.
Well, I think there are things that you can do. So, particularly at a provincial level. So, we've seen British Columbia do things like have a vacant home tax, because part of what's driving up demand right now is people buying second homes. So, yeah, and we're seeing that right now, that people have their home in Toronto, but might be living in a place that they bought in cottage country. So, what you could do is put a tax on those vacant homes to try and get those back on the market, and also try and prevent people from buying second homes. You can introduce various types of speculation tax or foreign buyer taxes. And we've seen these particularly in British Columbia. And they've had some effect, but they haven't been the sort of transformative instrument that people would have hoped to, again, sort of match supply and demand better.
Well, I know the Kathleen Wynne government, the previous government in the province of Ontario, tried both of those measures, I believe. This is admittedly going back 3 or so years now. Do you know whether either of those policies had much impact on the Ontario market?
It did, but interestingly enough, again, there's always side effects to these things. So we saw back in 2017 and 18 when the Wynne government did that, and as well we saw changes at the federal level on homes over $1 million or more, how the down payments and insurance on that work. That did reduce the demand in the Toronto market. We did see a correction in the Toronto market, but it didn't so much eliminate that demand as move it down the 401. So at this time where Toronto prices and Barrie prices and Mississauga prices were going down, we saw this big boom in markets like Woodstock and London and Tillsonburg. So yes, it can have an effect on a sort of localized level, but we have to make sure, okay, are we actually reducing demand, or are we just moving that demand down the highway?
Gotcha. Okay, let's hit the other obvious reason as to why there's so much purchasing going on right now, and that is interest rates are, of course, at historic lows. Can you just give us sort of your professorial Econ 101 take on why we've had such low interest rates for such a long period of time, relatively speaking?
Well, I think over the last almost 20 years, we've had this sort of secular decline in interest rates. And an interest rate is essentially the same as any other price. It's basically the price to borrow money. And we've seen over the last 20 years, as the population has gotten older and we've seen this demand from China, there's a lot of people who want to lend money. Particularly seniors, tend to move out of stocks and towards fixed, bonds and other interest paying instruments. There's a lot of money out there looking for interest, looking for yield, but there hasn't been that much demand for it, particularly as the economy goes digital. 40 to 50 years ago, a lot of that money would have gone into building factories and building, other sort of physical expensive things. That's gone down somewhat. So we have this big supply of money chasing a very small pile of investments. So that's essentially driven interest rates down to the historic lows that we've seen. And that's a global phenomenon. That's not just happening here in Canada.
Now, decades ago, if, for example, the United States put their interest rates up a few points, the conventional wisdom was Canada would have to do the exact same thing, lest we get broadsided by everybody moving their money down there. Is that still the conventional wisdom today?
Yeah, absolutely. That we only have so much control vis-a-vis the Americans. So, if the American interest rates are close to zero, it's hard for the Bank of Canada to deviate too much from that, or it starts to affect bond markets and the value of the Canadian dollar. So that's why across the board, you don't see that much difference in interest rates in developed country. Our interest rates are very similar to America's, to Western Europe's, to Australia's, and so on. And I think that's the only way we're going to see our interest rates go up significantly is if the interest rates in other globalized economies start to rise as well.
And when you saw the other day Janet Yellen, the American Treasury Secretary, muse about the possibility somewhere down the road of raising interest rates, I know a lot of people said she was just, freelancing and we shouldn't read too much into it. But did you?
Well, I think at some point interest rates are going to go up. I mean, our central banks, whether it be the Bank of Canada or the Federal Reserve, they're mostly targeting inflation. And if the economy starts to heat up, if consumers start to spend a lot of money, we are expecting to see inflation drive up. Now, we're already seeing it in some specialized markets, like the market for lumber, for instance, is up about fivefold. As these prices start going up, then the Federal Reserve and the Bank of Canada and other central banks are going to have to increase interest rates. It's just a matter of when and how much.
Mike, I want to pivot our conversation now and talk about what must be a very difficult and complex tightrope that Adam Vaughan has to walk. We had Adam Vaughan, who's basically the parliamentary secretary in charge of the housing file for the federal government. He's a downtown Toronto Liberal MP. And we had him on the program a few weeks back talking about how he's trying to do two things at once, which seem to be contradictory. On the one hand, he wants to create bridges to help first-time home buyers get into the market, but he wants to do that while at the same time not doing anything that would decrease the value of the homes that current homeowners live in, because for a lot of people, it's their pension, it's their investment, it's their future, it's everything. Is that doable? You know the rules of economics. Is that actually doable?
It's going to be hard to pull off, but I think that shows the policy challenge at all levels of government, that a lot of what's going on home prices is essentially zero sum, right? If home buyers are having to pay more, that means people selling homes are getting more for it. So anything that you do on prices is going to be either helping buyers or sellers. And naturally, no politician wants to make enemies of either group. So I think the tightrope there is just to try and say, okay, we recognize that home prices are going high, are getting out of control, but we also don't want to crash the market. So can we just flatten things out? And politicians really don't have that much control. I mean, we saw that in the 1980s, that they couldn't control how house prices went out of control in Southern Ontario. And in the early 1990s, they couldn't control the crash. And I don't think our tools are any better now. So, again, there are things they can do on the margins, but it's hard to be that precise.
You heard the previous discussion, though, in which Benjamin Tal consistently said, the only long-range solution to this problem of high housing prices is to create more supply. Do you agree with that?
I absolutely do. And I think if we look at home prices since about 2015 in Southern Ontario, they started to rise right around the time that our population started rising. So, and the two things are absolutely related. So, the only way we're going to be able to create some uh, normalization in the market is for every increase in the number of families, you need to have a similar increase in the number of homes. So, we're absolutely going to need to see that, particularly in our big cities, particularly here in Ottawa and Toronto as well. That right now, what we're seeing is a lot of families having to live far away from where they work and commute. So, we would like to have housing. It's not just the amount of housing, but where that housing is located.
Well, let me follow up on that because you have heard this allegation in the past, no doubt. Some people believe that all levels of government, frankly, from municipal to provincial to federal, they all have a perverse incentive to keep the price of houses going up and up and up and up because, well, for a variety of reasons, but let's just take one. If there's a land transfer tax that gets paid every time a house changes ownership, I mean, governments enjoy a windfall because of that. So do you think they've actually got skin in the game to keep the price of housing going up?
Well, I think they do. Now, they also have different incentives as well because they want to keep, millennials and families buying homes. I don't know, I really don't know if it's, this overarching, sort of plan to keep prices high. I think a lot of it is just a lack of planning. I don't think any politician back in 2015 was saying, okay, you know what would be good if we could, get the prices of a home in London, Ontario to go up 150%. So I think a lot of this happened by accident. A part of it was, a variety of different policymakers at different levels making decisions, and there was no real sort of coordination going on. So, I would say it was more lack of coordination than any kind of cunning plan to see home prices double or triple.
Gotcha. All right. Let me just for a second here talk to my good pal Tony Burke and get him to bring up one at a time here a couple of graphs that you shared online from StatsCan. And let's see if we can go through these together. This first graph, and I'm going to describe it in some detail for those who are only listening on podcast and can't see them. This is Ontario's population growth year over year. And essentially, we're looking at the last decade. And the line is fairly flat, actually a bit of a dip as you get to around the year 2016. The population somewhat steady from 2010 to 2014. It's about 125,000 people per year. In 2015, a dip to fewer than 75,000 people, but then a quick increase, and the line goes up, kind of looks like the COVID-19 line in a way, a quick increase to 200,000, stays there for a year, and then jumps again to 250,000. So we got lots of people coming here. Tony, let's bring up the next graph as well. Here's the next graphic, and this is Ontario housing completions by year. And this graph shows that housing supply does increase in that same period from 2010 through the end of 2019, though it's roughly steady, only moving between 60,000 and 75,000 per year. So, we do the math here, and obviously there's a big gap between the number of people coming here and the number of houses being built. And I guess the question is, if you got that many people coming here, they obviously need places to live. Why isn't the second graph, why isn't the number higher?
Well, I think there's a few things. First, we didn't see this coming. If we go back to 2015 and we were looking at the Ontario Ministry of Finance's forecasts or forecasts from the private sector, everybody was predicting that Ontario would grow by about 120 or 130,000 people a year, mostly because that's what it had done for the last 15 years. Instead, what happened was overnight, our population growth rate essentially doubled. That was due to a influx of what we call non-permanent residents. So they're coming to Ontario from international sources, but they're not necessarily here permanently. That's express entry workers, that's temporary foreign workers, and a lot of them are international students. So actually, people like me are somewhat responsible for this because our colleges and universities increase international enrollments. And essentially, we didn't see this coming, or at least most analysts didn't see this coming. So we didn't build the homes necessary to house this population. And furthermore, you can't just sort of pop up a house or a condo overnight. So even if you kind of see this coming, it takes several years for all this sort of planning involved. So that's essentially what happened, that our housing stock didn't change all that much, but our population did.
And if you were therefore going to be planning for not the last 10 years, but the next 10 years, would you infer that we're going to see again these large kinds of increases perpetually over the ensuing decade?
Well, that's the big unknown. That's the known unknown. I think we could say that part of what happened in 2016 was a bit of a Trump effect. That we saw what was happening in the United States. The federal government made express entry visas easier to get. The 2-week express entry to get more talented tech workers to Canada. We saw that international students were getting a little bit wary of going to the United States. So colleges and universities started enrolling more international students. We don't know what that looks like going forward. Partly we don't know what that looks like because of the Biden administration, but also partly we don't know what that looks like because of work from home. Now are we going to see that influx of students and visa workers if maybe they can learn online, or maybe they can work for a Canadian company but not actually be in Canada? So I think that's going to be the big unknown over the next 10 years is, are we going to see this population increase after the pandemic ends? And nobody really knows.
Let me see if there should be another thing on that list. So, temporary foreign workers, we've got foreign students coming in. What about people from other provinces in Canada coming to Ontario? What might that represent as part of that list of the population increase?
Yeah, so that plays a role in it. I would say it was about 10 to 20% of the role over the last 5 or 6 years, and it was mostly a reversal of other trends. That what had happened from about 2004 to 2016 or so is that Ontario lost somewhere about 150,000 people to other parts of Canada, mostly Alberta, and mostly due to the oil boom. Well, when oil prices collapsed back in 2015, the population flow started to come the other way. So we may see that as well. We may see a continuation of people coming to Ontario because we have a relatively stronger economy than the rest of Canada. And some of those just might be returning Ontarians who had worked in resource industries that may or may not rebound after the pandemic ends. So that does play a role. It's mostly an international story, but that the sort of made in Canada parts are important too.
All right, let me get your take on what has been one of the really interesting developments during the course of this pandemic, and that is for a number of reasons. One of which is people are working from home more often now, and therefore they don't have to live in Toronto like they had to if they need to work in an office downtown. The other is 35 to 40% increase in housing costs, even for places 1 or 2 or 3 hours drive outside Toronto. That's happening as well. I guess there are people who are leaving the big city to go even 2 and 3 hours away, because you can still, even at that inflated cost, you can still get more house for less money in Peterborough, for example, than you can in Toronto. In which case, do we know categorically who is making those housing purchases 1 and 2 and 3 hours outside the capital city?
Well, we know before the pandemic. Unfortunately, our data works with about a 1 year lag, but we had seen a lot of these communities increase their population. Again, I mentioned Tillsonburg. One of the fastest growing places in Canada is Thorold, Ontario, which is in the Niagara region. And a lot of that was families getting sort of priced out of Toronto. What we had seen, and this had been happening for years, but just sort of escalating. A couple of 20 somethings want to start a family. They're living in a 1 or 2 bedroom condo. They have their first kid and just decide, what, this isn't going to work. So they go find a house they can afford. They do what's known as drive until you qualify, where you get into a car and you go as far as you have to until the house prices are low enough that you can afford to put a down payment on that. And we know it's mostly driven by young families. The most common age to move away from the city of Toronto is 0. It's kids under 12 months. That's the most common age. If you take a look at the 10 most common ages, they're between 0 and 4 and 31 and 35. So that's who's leaving the city, or at least was pre-pandemic. We saw some retirees, but it's mostly young families that are looking to leave 1 and 2 bedroom condos and getting bigger units where they can afford to raise a kid.
I mean, you've been in this province for a long time. As you look at what people are now paying for homes, as I say, in Peterborough or Tillsonburg or Sudbury, I mean, can you believe it yourself?
I can't. No, I'm absolutely stunned by this. That we bought our first home in London, Ontario, a nice brand new 3 bedroom home in 2004 for $168,000. We then sold it about a decade later for about 250,000, and I thought we made out like bandits. I thought, 10 years later, I'm like, oh my goodness, we made $70,000 in 10 years on this house. Now we're seeing that the houses go up by $70,000 every 3 months or so. So I am absolutely stunned by what's going on. And again, that was even pre-pandemic. We sold one of our homes in. We've moved a few times since 2004. Back in 2017, we sold our house in London when we moved to Ottawa, and we had multiple bidders, all from Toronto, all with small kids. So I had kind of seen, even back in 2017, this happening, but just this exponential growth in prices that we've seen over the last few years has just been absolutely incredible to see a house in a Woodstock or Tillsonburg, going for $700,000 or $800,000.
All right, then. In our last minute, the federal budget, which came out not that long ago, had a couple of measures that they hoped would affect housing affordability in the short run. I'm not sure analysts are that impressed with what the federal budget had to announce on that front. But just in our last minute here, how do you see the story ending, if that's the right word to use?
Well, I think we're going to have to see more at a provincial level. The federal's hard because we're talking about 40 to 50% price increases, but we're not seeing that in Alberta, Saskatchewan, and Manitoba. This is not exclusively a Southern Ontario thing, but it's primarily a Southern Ontario thing. So I think, ultimately we're going to have to see action from provincial governments and municipal governments because this is such a localized problem. That said, I do think that there's more that the federal government can do around speculation, around vacancies and so on. So there's a lot more to be done.
That's Mike Moffatt from the Ivy Business School. Mike, it's always a delight to have you on our program. Take good care, okay?
No, thank you for having me.
The Agenda with Steve Paikin is brought to you by the Chartered Professional Accountants of Ontario. CPA Ontario is a regulator, an educator, a thought leader, and an advocate. We protect the public. We advance our profession. We guide our CPAs. We are CPA Ontario. And by viewers like you. Thank you.